Dear viewers, there is something unusual happening in the Indian stock markets. The Indian stock markets are going in a different direction when it's compared with what's happening in rest of the world. Indian stock markets are outperforming the rest of the world. In this video, I'm going to examine what is that which is making Indian stock markets outperform. This is NRI Money Clinic for you, and I am Dr. Chandrakant Bhatt, your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Dear viewers, a few weeks before we had made one video. Rupee is heading towards 80 and what you should do with your dollars. Wherein I had mentioned that it is time to convert your dollars into Indian rupees and invest in the stock market. The Sensex at that time was 52,000. What happened subsequently? The story played to the script. Indian stock market is very close to its previous peaks and the rupee stabilized just around 80 rupees a dollar. It exactly worked the way we guessed it would happen. It's not that we know what is going to happen in the next, but we gave you our best judgment. Those of you who have not seen this video, I'm going to give a link for this video here in the card section. Make sure you please check what we have mentioned at that time. Now let us look at what's happening in the stock markets of the world. Now let us look at the most tracked stock market, which is the US market. From the US stock market, if you look at Dow Jones, which made a peak of 36,000, it is now at 32,000 level, a figure of minus 13% from the previous peak. S&P 500, which peaked at 4,800, is currently at a level of about 4,000. That's minus 17% from its peak. Nasdaq, which peaked at 16,000, is at a level of 12,000. That's roughly minus 25%. This is the story from the US stock market. What about the world as a whole? The world market index is 17% down from its previous peak. The MSCI Emerging Market Index is minus 17% from its peak. If this is the story, where does the Indian stock market is currently? Indian stock market peaked at a level of 62,000 on the Sensex, and at the time of recording this video, which is on 12th of September, the Indian stock market is at a level of 60,000, which is just about 3% below its previous highs. There is something unusual here. The world markets are down and they are going down, whereas the Indian markets are going against the gravity and moving towards the top. What exactly is happening in the Indian stock market? What is that it is making the Indian market climb to higher highs day after day, which is not happening in rest of the world? Let's examine the fact which is helping Indian market to climb higher. First, let us look at the fundamental aspects of the markets. India's GDP growth came at 13.5% nominal GDP growth rate. This is not the real GDP growth rate. The real GDP growth is at about 7%. So the nominal GDP is real GDP plus the inflation component put together. That's about 13.5%. Even though it is slightly lesser than the expected values, still 13.5% nominal growth is a huge figure for the stock market. Likewise, what is happening with the inflation? Reserve Bank recently made a comment that the peak inflation is behind them now. That means to say, whatever the figures it saw in the inflation figure, the highest figures are behind them, and going forward, either it will go through a lower trajectory or it may remain lesser than the previous peaks. That's something which is an extremely positive thing for the stock markets, because when the inflation is lower, the RBI need not increase the interest rate to a great extent. The other fundamental aspects of the market is the crude and the commodities. The crude, which was at very high level, today is at less than 90 per barrel. And the basket of Indian crude, which is what is produced domestically, what is produced from Russia and elsewhere, is quoting an average price of $88 per barrel, and that's huge positive for the market because it has a bearing on the India's Forex reserves. Another fundamental factor which is helping India is softening of commodity prices. India imports a lot of commodities for its economy. When the commodity prices soften, it helps to bring down the inflation. It reduces the burden on the Indian Forex. Since commodities are priced in dollars, when the dollar becomes stronger, the commodities will become softer. This is one another factor which is driving the sentiments in the Indian stock market. One another factor which is driving the Indian stock markets on the upside is the activity of FIIs and the DIIs. FII stands for Foreign Institutional Investors, DII stands for Domestic Institutional Investors. Starting from October 2021 till July 2022, the FIIs were net sellers. They were selling left, right and center. They were selling to a tune of $30,000-$40,000 worth of stocks day in and day out. Every month they sold it during the last 1 year. But in the month of August, the FIIs, they changed the trend and they poured $7.5 billion worth of equities they bought in the Indian stock market. There is something here in this particular story. But in the past, every time the FIIs used to sell and walk out of the market, Indian markets used to fall like 9 pins. But this time, that did not happen. The reason is the activity of domestic institutional investors. When FIIs were selling, the DIIs were literally matching dollar to dollar, buying those stocks what FIIs sold. They almost matched it. And when the FIIs returned back in August 22, they had to pick up everything from the Indian investors all over again. Earlier, Indian investors used to suffer because of FII selling. Indian investors have learnt a lesson. Now they are making most out of FIIs selling and FIIs buying. What is happening with the SIP money that is being collected every month? SIP stands for Systematic Investment Plans. The flows from the Systematic Investment Plans subscribed in India stands today at 12,000 crores. I checked the figure for last 1 year. In spite of markets coming down, the investment through the systematic investment route did not come down. Instead, month after month, it started showing an increasing number, showing the Indian investor has become a mature investor today, and if the stock market comes down, they increase their buying. Yet another factor which is working in favor of India is its growing share in the world index. The MSCI Emerging Market Index tracks the different emerging markets. India is one of the constituents of MSCI Emerging Market Index. 3 years before, October 20, India had a weightage of just about 8%. Last year, October, India had a weightage of 12%. Whereas this year, when I checked last, India had a weightage of 14.6% in the emerging market index constitution. What does it mean? When the composition of index gives a higher weightage for a country, it means to say everybody who invests through an index route increases their contribution to buying that particular country or that particular stocks. Every time the composition of index favors India with a higher percentage, the Indian markets will gain strength, and that's precisely what's happening. I checked the top 10 stocks in the MSCI Emerging Market Index. Surprisingly, out of the top 10 stocks, 3 stocks are the Indian stocks. Which are these 3 stocks? The Reliance Industries, ICICI Bank and Infosys made to the top 10 stocks of MSCI Emerging Market Index. One another factor which is favoring the market is the resilience of Indian rupee. You may say that rupee has come down from 75 to 79 or 80 levels. Yes, it has fallen down. But compare it against other major currencies. Look at what happened to GBP, what happened to Euro, what happened to Japanese yen. All these currencies are more than 10% down against the dollar. Whereas the Indian rupee is quite resilient, and it has not even lost 10%. It has lost about 7% or so against the dollar, and that's a huge outperformance. I checked the Forex reserves figures of India. In the last 1 year, it made a peak of about $630 billion at the maximum level, in spite of so much of a problem in the international market because of rise in interest rates in the United States. India's Forex did not fall below 550. At the time of recording this video, the total Forex held by the Indian Reserve Bank is at about $553, which is about $84 billion lesser than the peak it made. And it's a fantastic performance by Reserve Bank of India. The deft moves made by the Reserve Bank of India made sure that India did not deplete its forex to a great extent. And the resilience of rupee is giving confidence to the FIIs to come back and pour money back into India. While this is the report card of the Indian stock market during the last 2-3 months, we are interested in the future. What next? Personally, I feel this growth story will continue. There could be a little bit of volatility when the Indian stock markets try to conquer the previous highs of 62,000. But eventually it has to be taken out. It may happen in a month or 2 months time, or it could take a quarter or two. Anything could happen. But there will be a bit of volatility when Indian markets go and touches again 62,000 on the Sensex level. But nevertheless, if your idea is to make money by long-term investment, you shouldn't be hesitating to investing in Indian stock markets now. The Indian stock markets offer the best possible opportunity today anywhere in the world today. Whether you are an NRI, whether you are a resident Indian, you should be entering the stock market today to gain a fantastic return in the next 5 to 10 years from now. Indians have, or the general public has, a very recency bias. It will look into what happened in the recent past and takes decisions based on that. Indians have seen that the US markets have given huge returns in the last 3-4 years. Dear viewers, please make note, this is a recency bias. Yes, US markets gave a huge return. You know the reasons? The primary reason is because of the printing of money, because the liquid cash chasing these stocks. As I said, these markets are already down by minus 17% to minus 25% if you look at whether it's a Dow Jones or if you look at what's happening in the Nasdaq. Is it the end of the US market or is it the bottom of the US market? The answer is no. The next 1 or 2 years will see US market coming down much more than what it is today here. So in your best interest, possibly it is best to avoid all developed markets at this point of time. In spite of that, if you want to take a call on any of the developed market, stock market, the best way for you to invest in those markets is to invest through systematic route. Do not commit big chunks of money. Do not commit huge amounts of lump sum into this market. Instead, invest small amounts at regular intervals of time. That is where your interest lies. Don't get carried away with what happened in the last 2-3 years, and that can be a trap for you. Dear viewers, India growth story will continue. It will offer you excellent results if you stay invested in India for next 5, 10, 15, 20 years. Everything that is happening right now on the growth prospect is working as per the script. You shouldn't be missing on this best investment opportunity of the next decade. If you are interested to invest in India, you can invest through the mutual fund route. Mutual funds can be built in the form of a portfolio, and a safe investment can be designed for you. As you know, I am a mutual fund distributor. If your intention is to invest in the Indian mutual funds, you can make best use of our services. We help you to build a robust mutual fund portfolio in a safe and a wise manner, and you can be the beneficiary of India growth story. If you want to invest in Indian mutual funds, simple way is to send us a message here on the number that is shown here on the screen, and one of the financial guides who is working with us will help you build a good, robust mutual fund portfolio. Why delay? Send that message now. Dear viewers, hope the analysis that I have made today helped you to understand why the Indian stock markets are outperforming from the rest of the markets in the world. If it helped you to understand, the reasons behind it, the opportunities that exist, please like this video. If you are a person who is watching my channel for the first time, or if you are yet to subscribe for the channel, please hit the subscribe button and press the bell icon. Don't forget to share these videos with your near and dear ones. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you with yet another useful topic in yet another video very soon.
Press the bell icon for more details and subscribe our channel.